In this video we are going to talk about dividend stocks from Singapore. So before starting, please like this video and subscribe to this channel for our future updates. Dividends are something that everyone enjoys. This inflow of funds into our bank accounts implies a measurable return on our investments. You may develop a healthy stream of passive income for yourself by building a dividend stock portfolio. The goal is to outperform inflation while also better preparing for retirement. Businesses with a continuous track record of dividend payments, as well as a solid franchise, are crucial characteristics to look for in dividend stocks. It also helps if the company generates a substantial amount of free cash flow, as this will help to support the dividend payments. Here are 4 dividend-paying stocks to consider for your investment portfolio. Number 10. Old Chongqi Sgx, 5 ml. Old Chongqi, often known as OC, is a snack food vendor that sells a range of snacks such as spring rolls, curry puffs, and carrot cakes. 30th of September in 2021, the group had a total of 89 locations in Singapore. OC reported a small year-on-year increase in revenue to $38.5 million for the first half of fiscal year 2022, 1H 2022, owing to greater delivery and retail sales. As of the corresponding increase in selling and distribution expenses as a result of higher staff costs to support the increase in revenue generated. Net profit decreased by 45% year-on-year to $3.4 million as a result of these factors. Free cash flow generation remained high at $8.1 million, despite the lower than anticipated performance. The group increased its interim dividend from $0.005 per share last year to $0.01 per share this year. The company's trailing 12-month dividend was 2 cents Singapore dollars, and its shares have a trailing yield of 2.9%. Number 9. UMS Holdings Sgx, 558. Equipment manufacturing and engineering services are provided to original equipment manufacturers, OEMs, in the semiconductor business by United Microsystems, UMS. As well as reporting positive results for the third quarter of 2021, the company also achieved record revenues and net profit for the first 9 months of the year in 2021. Revenue climbed by 50% year-on-year to $67.6 million in the third quarter of 2020, while net profit increased by 17% year-on-year to $15.1 million, both of which were records. During the first 9 months of this year, revenue climbed by 53% year-on-year to $184 million, while net profit increased by 35% to $47.4 million during the same period. The interim dividend was increased by a factor of 2 year-on-year, to $0.01 for the third quarter of 2021, representing a doubling of the previous year. The UMS has paid out a total of $0.03 in dividends to shareholders so far this year. Additionally, the company has given out a bonus share for every 4 shares owned by stockholders in the company. Number 8. QNM Dental Sgx, QC7. QNM Dental has the largest private dental network in Singapore, with 90 locations. The company employs roughly 270 dentists, who see around 40,000 patients per month. The company also runs 5 medical clinics and a dentistry supply and equipment distribution business. For the third quarter of fiscal 2021, QNM released some astounding data, 3Q 2021. Due to a more than 10-fold increase in income in its medical laboratory, dental equipment and supplies segment, revenue increased by 48% year-on-year to $57.7 million. In the reporting quarter, net profit increased 175% from $5.1 million a year earlier to $13.9 million. A third interim dividend of $0.01 will be paid to shareholders by the company. The total dividend for the first 9 months of 2021, 9M 2021, was $0.03, including the first and second interim dividends of $0.01 each. The shares offer a trailing dividend yield of roughly 6% at the current share price of $0.585. By the end of the year, QNM plans to open 9 new clinics in Singapore and 2 in Malaysia, as well as grow its dental workforce. From 2021 onwards, the company plans to open at least 30 clinics per year, with China as a new growth pillar. Number 7. DBS Group Holdings Ltd. However, although the company's headquarters are in Singapore, it maintains a global presence in the banking and financial services industry. When it comes to banking, it is the most highly regarded in Asia, which is vital if you are thinking about making a long-term investment in the country. Because of its strong balance sheet in terms of liquidity and capital requirements, it is looking to the future in terms of expansion and development. Its financial statement for the first quarter of 2021 shows that DBS made a profit of $2 billion, with fee income growing and net interest margins maintaining unchanged. DBS is Singapore's largest lender. The outlook has also improved as a result of the return of bad loan ratios to levels seen prior to the financial crisis. Number 6. Dairy Farm International Holdings Ltd. Dairy Farm is a Pan-Asian retailer with 10,000 locations and 220,000 employees spread across the area, according to the company. Cold Storage, Mannings, and Maxims are just a handful of the well-known brands under which the corporation does its business. In 2020, the company intends to generate total revenues of more than $28 billion. Included in this calculation is the dividend yield, which is a function of the gross dividend divided by the share price. This suggests that buying today at current low prices may pay off in the long run, particularly if the retail business rebounds from the COVID-19 outbreak. Number 5. Singapore Exchange Ltd. It is the firm that owns the Singapore Stock Exchange, SGX, that has benefited from the expansion of financial services, as well as the increasing popularity of speculative investments in recent years. Considering that it provides a high dividend yield and has the potential to appreciate in value, it represents an appealing combination of risk and reward. Number 4. ST Engineering. In the aerospace, electronics, and marine industries, Singapore Technologies Engineering Ltd is a manufacturing business with operations in Singapore. With a market valuation of $12.4 billion, the Singapore-based corporation employs 23,000 people and has its headquarters in the city-state. The consistency with which the company pays out dividends is noteworthy, despite the fact that the company's distribution may not be the greatest in the market in terms of absolute value. The company ST Engineering offers a level of reliability that may be of interest to you if you're looking to take an initial investment in a high-dividend Singapore stock and then leave it on the sidelines for a while. Number 3. Mapletree North Asia Commercial Trust. Since 2013, the price of Mapletree North Asia Commercial Trust shares has ranged between 63 cents and 1.48 cents per share, depending on the market conditions. In order to create steady long-term returns from commercial property assets in China and Japan, the Singapore-based Real Estate Investment Trust, REIT, is currently trading in the middle of its range. Number 2. StarHub Ltd. StarHub would lower its dividend in 2019, as well as in 2020 and beyond. It was one of the best-performing dividend stocks in Singapore during the last 10 years, with an annual yield over 15%, and it was one of the best-performing stocks in the world. Because this telecoms company is small and has seen its share price decline in recent years, long-term investors can purchase shares at a discount and wait for the stock to recover in value again. Number 1. CK Hutchison Holdings. In this case, the port operator is an excellent example of a company that is well-positioned to generate long-term dividends. Its revenue comes from providing support for worldwide trade and collecting a portion of the products that pass through its global network of 53 ports in 27 different nations. It is doubtful that the share price of Hutchison Port Holding Trust will rise in the same way that the share price of a technology firm might, because the company's growth potential is limited by the fact that there aren't many new port locations available. As a result of its strong position in an established business, any potential disruptors will encounter significant obstacles to entry into the industry. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.